All right, welcome back for another episode of Carnivore Trades. Today is Monday, February 13th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. So a little bit of a vol crush here ahead of CPI. Obviously, all eyes on the CPI. That is, if you're not following news about aliens or the Super Bowl, we're here to get back into the markets here after kind of a weird weekend, right? But anyways, markets here are up 1% here on the spiders. Triple Qs up 1.5%. Dow up 1%, and the Russell is up about 1% as well, just over 1% now. So let's take a look here. So what's going to happen here tomorrow? I did draw in a little bit of a flag. We talked about this last week a little bit. I did draw those lines in there today. It's pretty easy to see. But there's your high pivots, and then, of course, your low pivots in that area. We're kind of consolidating beneath this upper trend line here. So, I mean, I can't rule out a push up here. And technically, this is a bullish pattern. We talked about this. We went into that green bar. I would have liked it if you hit the 20 moving average, but you know, they probably, everybody was probably looking at that, so maybe that's why I didn't get there. But we are up a little bit. There's a couple of scenarios that can happen tomorrow. I'm not sure which one is going to happen. The consensus is 6.2. That is for the CPI. Again, we don't really care about the number. We just care about the market's reaction. We could get a hot number and the market could rally. So that's possible. We never know what's going to happen here. But basically, what you have is a bullish pattern here. One of the scenarios I see is that we gap up massively, regardless of the number. And you could take it, I do have kind of a measured move here. So just taking this breakout bar, so 402 to about 418. This is a 16-point move from 405. It takes you right into that gap, essentially, just shy of it. That the official gap fill is 422.14. So I could see that certainly happening. If that happens, I think the market's probably about done. And you might even get a gap and crap if we don't hold it. Remember, we talked about this last week. It's kind of reminiscent, right? So we had this kind of run up, and then we had that big power surge off of Jay Powell's speech. We pulled back, and then we curled back up. We gapped up, and we faded all those gains back within one day, and then that was the next leg down. I could definitely see that happening, especially if we fill that gap and then we get back below this pivot high at 418. That would be, a failed breakout there. Another scenario is perhaps the number comes in really hot, or maybe it comes in really cold. I mean, the market wants a Goldilocks number, remember that. So really, it doesn't want the extremes. So let's just say it comes in really hot, the market comes down. It is very kind of reminiscent to what we're seeing here, to August. Sorry, I'm losing my words there. But we had that big squeeze up. We kind of flagged. We popped, went parabolic into the 200 MA, and then we kind of curled back up. We ran up ahead of the I think it was either FOMC or CPI. I'm not sure off the top of my head, but either way, it was a news event that was highly anticipated. And then we went up pre-market and we sold off very sharply, obviously by the open. And you could make a case we've already kind of topped out and done that as well. Maybe we go up there to that trend line and then get reversed. Just throwing out scenarios here, right? So the thing that makes me a little bit more neutral on the fence here, and again, we did kind of pull back and now we're kind of running up a little bit ahead of CPI. So that would be kind of your nervousness there as a bull. Like, you don't want to be up too much ahead of the number. But so the big thing is it's OPEX week. So a lot of the time, markets generally don't, I do have, obviously we're looking for the market to roll over at some point in the near term. But with OPEX week, a lot of the time, the market will want to hold up for that. Market makers don't like the VIX exploding. when there's, when they have to keep control of the market, because it makes it very difficult to do that. So my guess is, if we don't reverse sharply tomorrow, we'll probably hold up in some capacity. Even if we do gap up and we, maybe hold the gains, we could go up here and leave an island. I know we talked about that as a possibility before, a possible like island reversal, something of that nature. But for right now, we'll respect the market. It's had a hell of a squeeze off the lows here. And again, you'd have a bullish pattern there until proven otherwise. So that's kind of what we're looking at right now. Now, I will say another thing too. A lot of the time with OPEX week, usually if you're up big or down big the first 2 days, by Wednesday or Thursday, that gets reversed. So there's a lot of dynamics going on here this week. We'll just have to take it one day at a time. And there is the closing bell. So market's basically closing at the highs of the day again. Did they just price too much of this in? That's a question here. So right now I'm very, very neutral at the moment. As far as what I think is going to happen here, we'll take a look at the VIX here, down 73 basis points. My guess is the VIX needs to make one higher low here. Something of that nature before it can have a move up. We did get a little extended there last Friday, which we did come back in, of course. But I think to me, might want to test 1950 again, maybe even a little bit lower, maybe that green bar low. So that's kind of the way I'm thinking this is going to be positioned a lot of time ahead of CPI when the VIX is elevated, ahead of CPI, ahead of FOMC, stuff like that. You'll get a vol crush afterward. So as those hedges come off, but who knows, that could last intraday. You could get a vol crush, like I said. We could gap up and then we could gap and crap like we did back here. Or even, back here in April. Even if we look at the futures here, you can see it on the spiders. We had a nice little reversal, or a nice little rally, and then it got reversed pretty sharply on both. This is the Jackson Hole day, and I think this was an FOMC as well. So, and then of course there's that huge topping tail candle there back in December. So either way, again, we're just going to kind of give the market the upside bias. We did hit the 20 moving average on the futures, just for what that's worth last week. I just would have preferred it if we did it during cash hours. But you can see it right there again. There it is. You do have kind of a sloppy rising wedge. It kind of broke bull and then kind of faded back in here. So not sure if this is the best range or best pattern here to follow here. But overall, again, big deal right now is that max upside for me right now, at least in the near term. I could be wrong, but I think the max upside is this area here, that gap fill. Could you get up to this area? Yeah, but I think you would probably you'd have to think that the market's going to have another leg up here, which I don't really see happening. So, but that is up at 427.89. There's that secondary gap there, just in case anybody was wondering. Anyways, let's look over the triple Qs here. So QQQ again, basically back tested 300, a little bit of a pierce on Friday, and we're up, just with everything else here. Notably though, today I will note that Microsoft, it really is mostly kind of like Microsoft and Apple doing a lot of the heavy lifting. Meta did have a decent day, although it kind of topped out after the first hour. Netflix did have a nice little pop, so Netflix getting off the lows there. But a lot of the price action today I noticed was driven by Apple, Microsoft, and strangely XLF was actually up decently, up 1.1% on the day. So that one, which has been a laggard lately, did show a little bit of relative strength here. But in any case, triple Qs, again, same kind of bullish type pattern there. Although they are notably a little bit farther off the highs. If this does bid up, it looks to me like it would make much more what I would call like a nominal high. So, the high here is 313.68. Maybe it could get to 315, 316, but I don't see it really pushing up. I mean, the August 19th gap here is 322.86, right? And then on the spiders, look how much closer you are to that. So I see a little bit less upside now in the Qs. Remember in December, we said we're going to look for a January effect rally in a lot of tech names. I said the NASDAQ will be the best performing index in January. That's been the case, and it's actually spilled over to February. I thought we would have rolled over by now, but sometimes these things can squeeze for a little bit longer than you think. It does take some time to get all those bears out of the market. But in any case, the Qs are a little bit more off the high, so we'll just take that into consideration. A lot of resistance up here at 320 there with that red bar going back to September. Anyways, Russell, all right, let's look at the Dow first. Again, Dow starting to push through here. So we didn't close, doesn't look like we closed above that high, 342.56. Probably by 3 pennies, we couldn't close above that high. But again, 345, maybe a pierce at 345 is still the level for the Dow. And then, of course, you have resistance above that at 348, which is the December level there. So Dow, the best performer. Well, no, not, excuse me. The NASDAQ was the best performer here, but Dow starting to break out of this kind of channel here. So a little bit better of a pattern, I would say, than some of the other names. This has had a nice consolidation. But anyways, let's get over here to the Russell 2000. So we had kind of this is a video I did for shorts over the weekend here, but you had kind of this rising wedge where we broke above it, then we broke back down, and then look where we stalled out today. You can see the IWM right into that level here on an intraday basis, and that's where it stalled out. I think the Russell is probably topped out though, so this one looks a lot more like the NASDAQ, whereas look at where you are here and look how high or far off the highs we are versus like the spiders and versus the Dow. So I think that Russell's already kind of had its blow off move here. Again, if we do push up if we do gap up tomorrow, the Russell's obviously going to gap up as well. But I think you're much more likely to find resistance at this old trend line here. So, 195 and change might be an area to watch tomorrow. There's also this red bar high, 195.12. So just a couple of things to watch going to tomorrow if we do have that gap up. If not, and we break below 188, Russell's in trouble. So you're probably going to get down to that 50 MA pretty quickly. You'll have some support at 185, just above that. But yeah, those are the levels I will be watching going to tomorrow. SMH here, again, holding up well. So up 1.5%. It's hanging in there decently. NVIDIA was able to recover from that pretty good outside move on Friday. AMD also green on the day, up 2%. Intel. So semiconductors getting a little bit of a bid here. It's hard to say with this one. I mean, 260, you got the red bar. That's your breakdown there. On the weekly, big red bar, lots of volume. This is your breakdown area. Remember, you're kind of bear flagging right in this area, and you've gone up here without really any pullbacks other than this one little inside week last week. So getting a little extended, and you're getting into resistance here. So I don't see a ton more upside here for the SMH. And also that was NVIDIA was back up today, but that was a pretty good little sell there on Friday. So we'll see if this can maybe make a new high here, but you're into a lot of resistance here on weekly, daily and weekly. There's the gap there. We filled that 50% fib, overbought. You're up over 100% in the last couple of months. So very, very extended here and overbought on some of these names. Anyways, over to cloud. So IGV also having a very nice day here, up 1.5. Again, you'll have resistance at the double top, 300. Maybe you can get a little bit of pierce of it, maybe 302, 303. There is a gap at 303.07 exactly. Let's draw that in, actually, just so we have a little reference there. I'll get that exact for us. Oh, there we go. And then, of course, your level here going back to August, absolute wall up here. Of resistance if we do get into this level, just so you guys are aware. There's also another gap right up here at 309.94. So a lot of resistance up here. And these are weekly levels as well as daily levels here. So pivot high, red bar, bear flag, overbought. So watch for those areas here. But I think tech is starting to get pretty long in the tooth. Anyways, over to the transports here. Transports had a decent day. It did gap down though. So unlike the markets and pretty much everything else, see all the other indices, the Russell was actually negative or flat to open. But the transports did open negative. They did recover, so up 93 basis points. Again, no terrible structure here. I don't like that you lost that green bar there, but it's hanging in there. Okay, it's above the moving averages. You left a lot of supply in that candle though, and there was a lot of supply up here as well. So I don't see a ton more upside here in the transports, but they're hanging in there okay, so we'll respect them for now. Okay, now on to the big stuff. So interest rates. The 2-year was down just 2 basis points. It actually had a nice rally here in the last hour. You can see here on the intraday. So a nice little bid there off the lows, but this is a breakdown here. And by the way, I didn't even talk about this over the weekend, but we closed below that green bar low. So guess what? That inverse head and shoulders is now negated. So we're no longer going back up to that target. We can just get rid of that. That's a breakdown there. And forget the CPI number. This is the real thing you need to watch tomorrow. CPI can come in at whatever it wants. It's all about what this does. So my guess is if we do gap up and this continues lower, it'll be, it might be a little bit of time. It might take some time. The market can kind of diverge from reality for a little while, as we have seen. Remember back in August, 2-year was not rallying, but spiders were rallying like the market, like the Fed was going to pivot. But the 2-year was saying no. And 2-year is saying no right now. And a lot of other, there's a lot of other things out there right now. In fact, the market's no longer pricing in a Fed pivot as far as the Fed funds rate this year. Another thing that I forgot to mention before I forget about it, there's a couple of charts I also want to show you guys here. Take a look at so net call volume, mega cap growth, and tech stocks within the S&P. That has surged lately, as well as call options with 10 or more, less than 10 contracts on the open. Look at that surge there. So that means retail is all in on this move. They're buying like it's 2021 again. And remember the last time we had that spike, August 2022. Did anything significant happen in August 2022? Yep, right there. So that's why we're looking for a turn right here. But in any case, let's look at the 2-year again. So was down today. That's a breakdown. The market's telling us it wants to go lower here, and it's not pricing in a Fed pivot. So all that talk is just nonsense if you hear anybody saying it. The 10-year was green, up 14 basis points, and the 30-year was green here as well. So up 50 basis points. That held that critical level there of that 100 moving average. We thought we'd get a bounce there. So it's holding up okay, but the 2-year is the lead dance partner right now. And we have to respect that moving forward. Anyways, over to home builders. So getting a bid like we thought they would. We thought it would hit that 20 moving average. But again, you basically came up here and tested that pivot. XHB is holding on okay. You have a gap up in this area, and then another one just above 72. I don't really see these making new highs right now. ITB, same thing. So a nice little bid there, basically off that 20 moving average. VNQ still within Friday's red bar, so VNQ on the weaker side. I think this one is topped out here. Got to get up here and fill these gaps. It's possible, but I don't see much more than that. XLF, again, watching this rising wedge. We could get a little bit of an outside move, potentially if we gap up, but then you're going into this red bar, which is also a weekly level. That's your failed inside bar there. A lot of supply trapped up in that area, so I'm not liking the financials right here. I don't think there's a ton of upside here. XBD is holding up much better. That's a little bit of a different story, as we've noted pretty much all of the year. Into crude here. So crude down 59 basis points today. It's hanging in there okay. Just a lot of chop shop here. It had a nice move off the lows last week. It's trying to put in a higher low here, but again, nothing's changed. 82, 72 on a weekly close. That is the level here to watch. XLE, inside hammer day. Nothing terrible here. This is actually not bearish, so nice move up Friday. And then an inside hammer, that's actually a bullish look there for XLE. Same thing with XOP. And OIH, which continues to be green. I'm starting to give this the upside bias to 350. This is holding up really, really well. Nat gas, a little bit more liquidations going on today, so down 3%. And again, the bid is there. It's just somebody has really been forced to sell this. And you can see it right here. It was just basically flat overnight. Around 7:30 in the morning, liquidations. So again, more forced selling here. I don't see it lasting that much longer. We have kind of, we still haven't put in a new low. So, I mean, that doesn't mean we can't put in one tomorrow. Take a look at the volume there, by the way. Look at how heavy the volume was today, and we still didn't make a new low. So, again, it does look like we're starting to see the last kind of liquidation phase happen here from all these funds that were probably way over leveraged up here. And this is just how things work. You get over leveraged and you come back. But now the rubber band is really stretched here. And you guys know my thoughts there anyways. All right. Dollar index, nothing really too new to add. Up move, flagging, still hanging in there okay. This could test 102 to 102.20 possibly tomorrow, but I think it puts in a higher low. And I am bullish dollar right now, as you guys are aware. Gold here into the 50 MA. Not really sure what it does. I don't like that it bear flagged above that. So, maybe you can get some type of a dead cat bounce here, maybe 1900 here, but I am expecting gold to get down to that 1825, 1830 area over the next couple of weeks. Maybe the CPI bids it up to the 20 moving average. I definitely can't rule that out here. But I do not like the metals right now. Same thing with silver. Silver actually looks a little bit better because you never really bear flagged to get into this 100 MA. So if I had to pick one to be long, I would pick silver for a move to 23. So you could probably get $1 out of that potentially, maybe 75 cents to be safe. If you want to take that trade, you could just put your stop below the 100, below the 100 MA on a daily close. But ultimately this is going lower here. That would just be a quick short-term trade there. And platinum, nice defense. So we talked about that 200 moving average. The 50% fib right into that last Friday, and a little bit of a pierce here. So we'll see if that one goes back up there and tests 1,000. Platinum hanging in there okay. I like that little reversal. Pretty oversold too, coming off those highs. But I do think platinum does have one more push down. Copper here held the 50 MA, so copper holding up a little bit better. You still have kind of an inside bar here, so just be careful. There is a bear flag technically, but it's holding the 50 MA for now. And on the weekly, really nothing wrong here. Just big green bar pullback here. If you do break below this green bar low, copper is going to go a lot lower. But for right now, it's hanging in there okay, so we will respect that for now. All right, back over to Bitcoin. So on to TradingView here. There we go. So again, we had that down move, and now we're just kind of chopping inside bar here. So we had a kind of a bullish consolidation here with a rolling top. And now we have a daily inside bar. You are above the 21,000 support area. You are above the 50 moving average, but the longer this consolidates, the more minor this level gets. So again, we'll see what happens with the CPI number, but Bitcoin not really bidding with the market here. I had to put in a little bit of a tail candle here today, but it's not getting that ripper that, just look at the SPX here. SPX had a big pop today, right? And Bitcoin kind of lagging. So maybe it's leading, maybe it's nothing. I don't know. But Bitcoin here, watch that daily inside bar. If this consolidates above this area, it will become minor. Okay, yeah, lastly, back over to the markets here. Again, spiders hanging in there, daily bull flag until proven otherwise. It's all about the market's reaction. We don't care about the number. If we do bid up, we gap up. Again, 418.31 on the spiders. Any close below that or any loss of that would probably be a fake breakout. So just be aware of that, and I think we'd probably go a lot lower. But right now, again, it is OPEX week. Who knows what's going to happen here? The 2-year right now is saying that inflation isn't done, but sometimes it can be a little ahead of time, right? The 2-year, back on the November CPI, the 3-month and 10-year was not inverted. But as soon as this bid happened here off of that CPI print, it inverted that day. And then it took like a month for it to really play out. So sometimes the bond market is usually ahead of time. It's just a matter of how far ahead of time is it. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.